cost during a specified period to earn the revenue. If you understand the balance sheet and the profit and loss account, you come to know about that. We have discussed so far in that videos that the balance sheets and profit and loss account, these all show you in income statement. They show you the expenses of the company for a particular time period. Okay, like for an year. Okay, so this is very good example of expenses. Now, very general thing. What is the example of an expense? Paying salaries to the employees is a very natural thing. Paying rent of the building in which the factory or manufacturing is taking place. Travel and transportation expenses, that is basically logistics and supply chain management. Then advertising cost, the marketing cost of that product, or you want to, or the repair and the maintenance cost of the assets of the business. Okay, so these all are concerned with the examples of the expenses. Okay, so these are the basic terms. If now why I'm taking these things, because when I discuss about the accounting equation, there will be certain transactions which will be given to you and you have to make out the accounting equation out of that. Okay, so that is why you should understand that what are the monetary transactions and what is the effect of these transactions. Now, if you can these is see in this example, salaries is the main thing which is to be paid to the employees. Here rent is the main thing. Then here travel and transportation is the main expense. That means we are generally consider the expense one, the expense. Then here advertising cost is expense. Okay, so whenever you study any transaction, just try to understand what is the main particular subject of this transaction. Suppose here subject is salaries, here subject is rent. Okay, then here subject is travel and transportation, here subject is advertising cost. So this you have to understand, that you understand the subject of the transaction. Okay, so that the things become more clear. And next we come to fixed assets. Now we have also discussed about fixed assets, but we'll discuss in terms of accounting equation. Okay, so what is fixed assets? They are tangible assets meant for long-term use. They're not purchased with the intention to resell it, but actually they help in the manufacturing or producing the goods for the business, and they have a useful life greater than 1 year. I told you earlier also in the very first video that they have a useful life, that is they are generating you the benefit for more than an year. Okay, they are also called the long-term assets. Okay, because their benefit is spread over, the cost is spread over the period of number of years of their useful life. Okay, so like machinery, equipments, furniture, table, car, van, mobile phones, this iPhones also, the laptops also, buildings, all these are examples of fixed assets. Now this definition, my purpose is to give you, because this is these definitions which I am providing you in the presentation, they are actually the well prepared answers for the exams also. So you can actually write your answers in exam also. Now, current assets. We have also discussed about current assets. That is, they are either easily convertible into cash and they can only benefit you for period of an year only. That is, they generate you benefit or provide you benefit for an year or less than an year. Like they are used to meet the day-to-day expenses of the business. Like suppose you have cash available in your hand. That means this cash can be used to meet the day-to-day expenses of the business, like stationery, office supplies, etc. Okay, so office supplies, then short-term deposits, inventory, cash. Inventory we have discussed about in the previous videos. Then liquid assets. Liquid assets means the assets which are readily convertible into cash. A very good example of the liquid assets is debtors. Debtors can be easily convertible into cash within a period of 1 year only. Okay, so that is the debtors, your office supplies, your inventory, they all come under the category of liquid assets, because these assets can be easily convertible into cash. Now the most important thing might arise in your mind, that one time you are saying they are current assets, another time it is an expense also. Now a confusion can create in your mind, so that is why you can understand about here that if you talk of office supplies, they are also an asset to the business, and also the company is incurring the expense at the very same time while buying this. That means there are two things affecting a transaction. Okay, so why I'm trying to say is, suppose you buy the stationery over here. Now again, the stationery is coming into the business and the cash is going out of the business. That is why a transaction always has two effects. Okay, so I think now I think the clarity will be more, because now if you can see the example over here, it used to mean the day-to-day expenses of the business. Now expenses, one time the company is incurring any expenses, at the same time the company is having one asset in the business, though it is short term or long term. Like suppose this is also an asset, like like you suppose you have your say furniture also, if you talk of fixed assets. Now furniture is also an expense for the business, but at the same time it is an asset also. That means one time the furniture is coming into the business, the other time the cash is going out of the business. So it is a two-way transaction. The transaction is having two effects. Okay, so that is why the difference between assets, current assets or assets and expenses must be clear. Okay, so that we can differentiate what is an expense and what is an asset. Okay. Now we come to cash sales and credit sales. Now